than just business news, we're news for business people.
Good morning and welcome to this very wet morning and a very dark morning in Mumbai at least. Cyclone Oki has arrived to our shores, and while it rained yesterday, this morning too, it has been a very, very wet morning, Ira. The drive was good.
It's packed, schools are closed, but markets are not, and we are not as well.
Yeah, so that's the sad part. But anyways, good morning to all our viewers. Thank you so much for tuning in to IndianOpen. I'm Media Chat.
Good morning, Neeraj. Good morning, everybody. I'm Ira Dugal. Let's get straight to the headlines. A divided U.S. Supreme Court lets Donald Trump travel ban on 5 countries take full effect in the interim, even as deliberations continue. Fitch cuts India's growth outlook, says the economy will grow 6.7% in FY18, a reduction in forecast for FY19 as well. It's good news for auto component makers like Bharat Forge and Ramakrishna Forgings, with U.S. multi-axle truck sales rising by more than 60% in November. And Ahmedabad-based Shalby hospitals will open for subscription today.
Well, a brief look at how the trade setup is looking like. Bring up what the rest of the world did yesterday, and it was a pretty happy place to be in, at least until late trade Indian time. So this is what the US markets did. Very happy for most part of the trading day. I think came off a little bit in the last, maybe in the second half of trade. And maybe, just maybe, the Asian markets are taking cues from that, because it's a tick of red across. Nikkei is down about 0.5%. SGX Nifty is down about 0.25% as well. And it's interesting because we performed poorly when the global markets were doing rather well in trade yesterday. So remains to be seen what do we do in today's session, whether we come off more from where we are, or do we kind of stay put? Because the Nifty Bank remains the key monitorable. Been saying this for a while, but in yesterday's session, you saw evidence of that. The last 1 hour was completely dominated by what was happening to the Nifty Bank. It went down, pulled the index lower. It went up in the last half an hour of trade, pulled the index up higher as well. So this remains a key monitorable ahead of the policy as well. I think this would be very, very important. I thought a couple of heavyweights and some interesting positions that they have. So HDFC Bank and Reliance Industries are both amongst the heavies, which are trading very close to the 50-day moving averages. And if I can get up the Reliance chart on the screen and just plot the RSI lines out there, you will see what I'm talking about. Thrice in the last 3 months, Reliance Industries has bounced back from the 50-day moving average. So that remains a key pivot for Reliance Industries. Just watch out for this one in the session today, or over the course of the next few days, of course. What to watch in terms of stocks? I think Bharat Forge, our headline stated that as well. Ramakrishna Forgings, Forgings, the North America Class 8 truck sales. Higher YOI, slightly lower month-on-month, but you would probably look at the higher YOI number, not really just the month-on-month number, because the month-on-month numbers may vary a little bit here and there, but the trend certainly seems to be on the up for the Class 8 truck sales. So one that is to watch out for. I think Just Dial would be an interesting one to watch out for as well, because HDFC MF has added another 1.3%. They've been buying around these levels for some time now, unless I'm very wrong. So do watch out for Just Dial. Could be an interesting one. There is Sandur Manganese, and we'll speak to the management a bit later on in the show. But blockbuster numbers, revenues up 88%, net profit up 211%. And I thought the margins were fairly strong too. The margin performance 29.9% versus 15.7%. So these numbers would be something that the street would be watching out for. I think a couple of other players include Kirloskar Pneumatic, because there's a story, I think it's about Kirloskar, that there's a story in the Mint which says that there could be a stake sale there. So that's something you would watch out for as well. But it's all about what would happen to some of the automakers and the auto components, and we'll briefly chat about those as well. But first, let's tell you what's slated to come on First Word today. That's the editorial choices that me, Menka and Ira bring into the table. As the RBI Monetary Policy Committee begins deliberating, we touch upon just some of the issues that determine the decision tomorrow. We'll also look at what's driving up the auto component stocks, as I said, besides just higher sales. And as campaigning in Gujarat enters its last leg, the latest Lokniti CSDS ABP poll suggests it may not be a cakewalk for the incumbent BJP after all. But firstly, the two-day RBI Monetary Policy Committee meeting begins today. While we'll have to wait till tomorrow 2:30 p.m. to find out what the committee has decided, the 6 members will have a lot to deliberate on over the next 24 hours or so. Ida, what to your mind could be the core of the debate?
Neeraj, it's a 2-day MPC, so we are taking the liberty to divide our analysis into 2 days as well. So we're going to talk about some of the macro issues today, and tomorrow perhaps some of the practical issues. As you look at the macro data, it seems to me that the debate will come down to what is happening on core growth and what is happening on core inflation. I say that for a couple of reasons, and we're going to start with the core GVA chart. Now, the core GVA is constructed by taking out government and agriculture. It is essentially telling you what is happening to the part of the economy which can be influenced by interest rates. And this is a chart that we've borrowed from Yes Bank, so credit to them. But if you look at what has happened to this chart in the post-demonetization and then GST period, this is the yellow line which is showing you core GVA. It is telling you that core GVA started to rebound in the last quarter, and that rebound continued in the current quarter. In fact, if you look at it in comparison to the headline GVA growth, core GVA has rebounded a little bit faster. The basic point there being that there is no sort of untoward incident happening on the growth front, at least in terms of core GVA. Everybody knew that there would be a dip because of demonetization, there would be some sort of uncertainty because of GST, but everyone expected this to be a 1-2 quarter hit, and it does look like it is shaping up that way. Of course, it is by no means back at the levels that you had seen pre all of these disruptions. So as a lot of economists had told us on the GDP day as well, the direction is right, the level is not yet quite right. But since the direction is right, the Reserve Bank of India and the Monetary Policy Committee will probably take note of the fact that growth is shaping up as per their expectations. On the other hand, if you look at core inflation, which is why I'm calling this the core of the debate, because these two core numbers will perhaps be the main point of debate. On core CPI, you have seen that number, except for a couple of months of dip below the 4% mark, remain more or less above 4%. So you're at about 4.5% on core CPI right now, while the headline number is at 3.6. The headline number, remember, will get influenced by food prices, it will get influenced by oil prices. Those components will be the volatile components, will push up perhaps core CPI closer to CPI. Perhaps push up CPI closer to core CPI. But if you look at that core, again, that core is what gets influenced by rates the most. From there, the RBI will probably not derive too much comfort. So just those two analysis points as to what is happening on core growth, what is happening on core inflation. Perhaps the MPC will take note of that, or at least a large chunk of the MPC members will take note of that and say that we don't have any reason to change our view from last time's policy. That seems to be the view in the market. Most economists are saying that there will be no change in rates this time. There is a small constituency which continues to argue that perhaps one more rate cut is justified because the output gap is still fairly wide. So, on the assumption that you don't get a change in rates this time, and this is a slightly long-term question that I'm bringing up on the next chart, I think what is interesting to me right now is to debate and understand what will this rate cycle look like. Remember, this rate cycle is now in a very different context because we are an inflation targeting central bank. So I've just pulled up the rate cycle from the start of the 2000s, and we've had two dips. So you had the 2003-2004 period where you stayed at sort of status quo for about a year or so. Then you had the 2009-10 cycle where again it was about a 10-11 month cycle where you were at flat. We won't count the 2013-14 cycle because I think this was a slightly misguided rate cutting cycle. So the question I'm pondering right now is that if you get status quo this time and if you get a sense that your rate cycle has flattened out, how long will you stay flat? Will the rate trajectory rebound faster because you're now in an inflation targeting world, and as soon as you move away from that center point of 4%, will the MPC start to raise rates quicker? Or on the other hand, if you have managed to get some lid on this price pressure problem, could you see a relatively flatter rate trajectory for a longer period of time? I think those are questions that are interesting to me right right now, not so much whether we get one more rate cut or not. Most people think you will not get one more rate cut, but even if you do, where does the cycle go from here on? Is it going to be a relatively flatter cycle? Is it going to perhaps rise but not rise as much as we have seen in previous cycles? Those are the questions that are interesting to me right now.
And then you want to juxtapose that with global inflation, given that you're seeing tightening across the world by central banks, and with the commodity upcycle.
Oil, yeah.
Yeah, so we talked about that on the previous chart.
Yeah, 2010 to 2017.
Yeah.
Or maybe 2012 to 2017, you've seen largely a commodity down cycle.
Yes.
Right? You might now see the recovery of one, if at all that's what's panning out.
Yes.
So you've got to juxtapose your potential flattening of rates in India versus what's happening across the world in terms of inflation. And what's happening across the world in terms of commodity prices.
Sure, but I think, so if you look at the core inflation part, which strips out the volatile food and, energy prices, which honestly we have absolutely no control over.
Sure.
But the point is that in getting into an inflation targeting world, have you managed to put a lid on core price pressures in the Indian economy? Because our biggest problem has been that every time we have seen rates come down, growth pick up even a little bit, you see inflation skyrocket, right? Has that changed? And in fact, there was that chart is not up here, but in the last MPC's deliberations in the monetary report that they put out, there was a 10-year inflation expectation cycle. On that 10-year inflation expectation chart, actually inflation expectations have come off quite steeply. So they were in the 8-9% ranges. Now they're closer to the 5-6% range. All of those will build into how quickly inflation picks up and where it stabilizes. Of course, oil will play a part in it. Of course, food will play a part in it and all of that. But just that, if you're in inflation targeting and if you've had a success of inflation targeting, it's way too early to call a success. But over a period of time, if you have a success of that policy, then your rate cycle should become less volatile. That is exactly what bond investors have been betting on globally. Why is there so much interest of foreign investors in Indian bonds apart from the higher coupon rate, etc.? But because they feel there is predictability on rates. Now, that predictability on rates, according to me, has to show up on the repo rate as well from here on. But that will be the interesting thing to watch to see how it does actually play out.
All right. That's one heads up to the monetary policy announcement tomorrow.
Yeah, and remember, I think we'll discuss the practical issues tomorrow. This is
liquidity will be the
issues.
big sort of talking point tomorrow. We'll come back with that.
Yeah.
All right. Let's move on then.
Yeah, let's move on. Just a small detour into something more micro, and that's what's happening to autos and auto components. And I remember Darshan's analysis yesterday, or a report out yesterday, about how some of the CV companies have done exceptionally well. Ashok Leyland, Tata Motors, the CV business, etc. Brought me to this piece, and I just wanted to see if indeed that is reflecting in the way some of the pure play CV suppliers are doing on the bourses as well. So here's what happened to some of these names, and I've chosen 5 or 6 names which I thought were in a large way domestic commercial vehicle suppliers, and therefore I've omitted a Bharat Forge, which has an international exposure as well, which doesn't only do CV component suppliers. So Jamna Auto, Setco Auto, Forgings at new highs for themselves. Very close to new highs. Actually, both of these stocks, the next 2 stocks, hit new highs, but came off in the last couple of trading sessions maybe. And the ones that I'm talking about is GNA Axle and Automotive Axle, not Jamna Auto really. Jamna Auto is at new highs, but GNA Axle and Automotive Axle are trading very close to the new highs. And Bosch, by far the largest player out there, after having a torrid time in the last 12 odd months, the last 7 or 8 days has done really well. The stock has moved up about 8%, and this is Bosch, which doesn't typically move up like this. The last 7 days has about a 6.5 to 7 odd % gain as well. Now, why this could be happening? Look at the medium and heavy commercial vehicle sales for November. Tata Motors, 88% gains November. Ashok Leyland, 54%. Mahindra & Mahindra, 22%. Volvo Eicher commercial vehicles, 68%. So CVs, both medium and heavy commercial vehicles, have done exceptionally well for the month of November. And maybe that is why some of these names have been trending higher. If you've not heard about these, just a quick recap. Jamna Auto is the leading supplier of leaf springs to commercial vehicles. And obviously the shift in commercial vehicle demand towards the high tonnage vehicles, which is what everybody's talking about, will benefit the company because the product that they manufacture will be more in favor. Setco Auto, you heard the management yesterday on Bloomberg Quint as well. They're a leading clutch supplier to CVs, and they mentioned that they've reversed all of their losses of Q1 and Q2, and Q3 and Q4 will remain as strong. They've guided to about a 15 to a 20% growth in the second half. Forgings, they manufacture machine forging products, capex is done, new capacity on stream by Q4. They believe that the new capacity will be able to substantially contribute to top line because the CV cycle is turned about. It trades at a substantial discount to leading forging players as well. So this is one more company that could have some upticks. And then you look at the valuations that all of these stocks are trading at. On FY19 EPS for 2 or 3 that I managed to find out, they're all trading at about 15 to 16 times for stocks which are likely to grow northwards of 15 times for the next couple of years if the CV cycle stays well. So that's what the market seems to be betting on, and which is why this uptick that we're seeing in a bunch of these names. Remember, standard disclaimer, I've not taken companies like Bharat Forge, like Motherson Sumi, which are large players, but not necessarily 80 or 90% CV oriented. They supply to a bunch of other players, including private vehicles, including defense for Bharat Forge, and therefore those have been omitted. Only have chosen pure play CV players, 80-90% revenue coming in by supplies to CVs and on the domestic market largely, and which is why these set of names, most of them seem to be doing well currently.
All right, that's the auto outlook. And I know we're looking forward to monetary policy decision this week, as well as how the markets react to that and all the other economic news. But really, the talking point for the rest of this week and for a better part of this month is going to be the Gujarat elections, and what a heated battle it's turning out to be. So this morning, we're going to spend a few minutes on politics. The latest opinion poll conducted by Lokniti, CSDS and ABP News in Gujarat shows the BJP losing ground with voters. Opposition parties led by the Congress are playing catch-up. But will that be enough to overthrow the incumbent party in power? Joining us on the phone line is Quintillion Media's editorial director, Sanjay Pugalia. Good morning, Sanjay. Thanks very much for joining us. That poll seems to suggest equal vote share for Congress and BJP. Now, it's been quite clear to all of us observing this, even from business newsrooms, that this is going to be a heated battle. But is it really going to go down to the wire like that?
That could be the case, Menka, because at the ground level, there is a definite undercurrent of anti-incumbency of 22 years, and BJP could maintain 10% lead so far in previous assembly elections. So there will be definitely a narrow, the gap will definitely narrow. We always believe that it could be worst case 4-5% lead for BJP. But now this opinion poll, this survey suggests it is very close. This could be the case, but again, there are riders that if polling would have taken place when the survey was conducted, this is the outcome of that time. So situations change, and I am sure after reading this survey, the entire BJP machinery and especially Mr. Modi will now put more energy behind the campaign. So we have to wait.
Sanjay, that's not the only rider. I think this very survey or combination of people didn't quite get it very right in the Uttar Pradesh forecasts. I don't mean to knock the poll at all, but a decline from 59% vote share to 43% for the BJP, a rise for the Congress from some 20-odd levels to 43%. What Gujarat are we talking about?
Sounds unbelievable, but CSDS knows they are under pressure because not only UP elections, in August they did a survey and they gave 150 seats to BJP and maintained almost a similar margin of 10 to 12% vote share. And now they came down to 6% and now to 0%. This is strange. This is very amazing. But CSDS does a continuing kind of research work. So they know that they may be very, very wrong, but surveys are survey.
All right. If this were to pan out to be the truth, if there were to be equal vote share, does this give us any cues of what it means for the BJP for 2019? Or is it too early to tell?
Too early to say, because in Indian politics, no setback is a permanent setback. No victory is permanent victory. So the worst case scenario could be that Mr. Modi's the premium factor that 2019 is a given forecast may not be true, and he will be under tremendous pressure to now again rebuild his following. So far, Mr. Modi's personal credibility remains very, very high. But Gujarat, the entire generation has seen only one party, one establishment, one leader. All other issues are now relegated to sidelines. Nobody talks about Mr. Rupani. It is only Mr. Modi. So the stakes are very, very high. Somebody who is a BJP supporter, when they were discussing yesterday's poll results, so opinion poll results, somebody put it very well, that if these results are going to be true or something around this, then the implications will be on individuals. And he did not elaborate what he really meant by that. I would guess that the implications could be definitely on Mr. Amit Shah and Mr. Narendra Modi, both. But can they sail through? Yes, why not?
Sanjay, good morning. Neeraj here. I'm just referring to one tweet that I retweeted of yours as well. It was in Hindi. शून्य, एक और 5 के आंकड़ों को अपनी श्रद्धा के अनुसार सजा लीजिए. Now, my question to you is, to your mind, irrespective of this poll, do you still stand by those? And therefore, the range, as I saw it, varies very widely from 100 on the downside, because you did say 5% here and there. 100 to about 155, does it still stand to be such a wide range?
Yeah, honestly, I maintain the same position as we discussed in our previous conversations, Neeraj. That is, that this election for BJP is very difficult, but they have super efficient election machine compared to Congress machine, which is kind of in a stone age, still in the stone age. So finally, the resentment, will it get converted into actual voting? On that parameter, BJP is going to perform well, and Congress may not be able to convert all the votes that it might have had in the anti-BJP excess. So I would say that, yeah, it is difficult election for BJP, but they will still be comfortably forming the government.
All right, Sanjay, we'll leave it there this morning. Thank you so much for joining us. Sanjay Pugalia there, Quintillion Media's editorial director, helping us make something of that CSTS poll, which, you know, quite astonishingly puts vote share at equal for BJP and Congress. And that's possibly the reason why we picked this to talk about this morning. And none of us here are political experts, but you got to raise an eyebrow. That is Gujarat. Yeah. You know. And to think that the Congress could have made, I mean, even if they don't make, or even if they don't get an equal vote share, that kind of gain, to suggest that kind of gain is quite incredible, you know, and I think, wow, I mean, it is going to change how people perceive 2019 to be a sitting duck of an election.
Yes, and this will have an immediate impact if indeed the election is not, the result is not in favor of what the market wants it to be. It will have a really big impact on the markets in today's session. Let me tell you, almost everybody that I've spoken to is now making sure that they are in Gujarat over the course of the next 3 or 4 days to try and survey what could their own findings be for their clients, because the movement on the Nifty could be very, very strong if the election verdict is not in favor of the BJP as much as people are pricing it to be right now.
Yeah, and I know Ira's been silent all through, but ma'am, this is going to impact the fisc for some reason.
I'm silent because I have nothing to contribute, not because I think
but if they don't make the gains that they hope to make, or they don't win with the margin that they hope to make, I'm wondering, right?
But what will they do? I mean, that's another debate for another time.
Yeah, I know, but you've got to think about what the implications could be.
Your friend GST has...
Dear God, to be accused of this early morning is more than I can take. We're going to close this on first word. I know, but lots more lined up for you on the show. We discuss investment strategies with Mahesh Patil of Aditya Birla Sun Life Mutual Fund. Make sure you tune in for that one. The steep hike in iron ore prices with TRK Rao of NMDC. That's going to be an interesting conversation. And business opportunities in the smart city and defense sectors with Anand Agarwal of Sterlite Technologies. All of that's coming up on Indian Open. Stay tuned.
For now, full tilt towards the day's trade. Let's take a look at the derivative space. Agam Vakil is standing by with the FNO setup. Agam, good morning.
Good morning, Neeraj. Well, consolidation continues on the benchmark indices. Nothing really has changed, at least as far as the underlying is concerned. However, we're looking at a little bit of accumulation coming along when it comes to its futures. On the other hand, when it comes to the Nifty Bank, that index has moved off and seeing a cut of around nearly 0.5%. However, accumulation towards shorts with 12% added in terms of open interest. But moving in, the India Volatility Index now inches back towards the mark of 15. Remember, a lot of analysts were talking about 14.5 as a little bit of a concern that could mean an increase in volatility going into the next couple of days. But that said, when it comes to the option changes in terms of open interest, we are looking at more and more resistance building in the 10,400 and the 10,500 levels, as you can see here, because of accumulation. On the other hand, a little more writing coming along in the 10,100 put as well. So those are the levels that you can work with. In terms of the F&O band, there aren't any in terms of stock futures, but Biocon, of course, has seen a surge of nearly 17% in open interest, with the stock itself also moving up by as much as 14%. Also, a lot of longs building in. I don't know if we will see an extension of this long play, or we could see a little bit of covering as well in terms of position. However, on the short side, we're also looking at a lot of weakness in Just Dial, where the stock moved down by as much as 3.6%, and the open interest also moved up by as much as 9.3%. So we'll be watching out for these stocks as we go into today's day of trade.
It's a strange series, Agam. We don't have stocks in the F&O ban for what, now 3 days?
3 days.
I know it's the start of the series, but we've been used to having those stocks in the ban for so long.
Yes.
Yeah, but it's interesting. Thanks a lot for that analysis, Agam. That's actually, Agam's point is my starting question to Abhijit Phatak, Director at Definet Solutions, joins us right now on the show. Abhijit, good morning. Thanks so much for joining in. The 9900 strike became a bit active in trade yesterday. The market didn't do well despite the globe doing okay, and we're likely to start off about 1/3% in the red again today. How does that augur for the index moves?
Good morning, Neeraj. I'm not too bearish at these levels because even if, the first support is the 10,094, which is the low of November. And even if that goes, there are a couple of supports below that, and I don't think this is a time to go at least take fresh shots. No way there'll be, I wouldn't recommend taking any fresh shots at these levels. In fact, people should be looking to take longs on a signal.
So what would that signal be, Abhijit, according to you?
First signal is the Nifty spot going above 10,180, and the second signal is closing above 10,220, and once it does that, it can give a rise of maybe at least 150 or 200 points.
Abhijit, some very interesting moves yesterday in stocks like Shipping Corporation of India, but more importantly Biocon, which I think was very active in the F&O space as well. Did you get a chance to look at Biocon trade, and what would you believe the near term could hold like? What would today hold like?
Biocon has a resistance near yesterday's high, which is about 512, 515 on the futures. As long as that is not crossed, I'm not suggesting to go short in it, but it might go sideways between 510 and 490, and only above 515 it can show some further strength. But I wouldn't recommend any fresh longs as long as 515 is not crossed on the futures.
Okay, what's the stock specific strategy for the day today, Abhijit?
Again, after almost a couple of weeks, PSU banks are looking good to me, and most of them have come out towards supports. And one of them which looks better to me is the Bank of Baroda, which had a good support near 165, 170, and it showed some buying towards the end yesterday. So again, there is an event which is the RBI policy, so it might not be prudent to take a position in futures, but maybe a 180 call or 190 call in Bank of Baroda, which might be near 3 or 4 rupees. That might pay well in the coming days.
And lastly, a quick word on Bharat Forge. Abhijit, likely to react today. It's not been in the thick of news for the last couple of days, but any thoughts here?
Bharat Forge has been weak. Actually, has been correcting, but it has good support near 680 futures. So I would recommend, if as long as 680 futures holds, one can go long on it for a target of at least 700, 720. Yeah. 680 is important. Sorry,
Vijit, just threw it out of the dark at you. But thanks so much for taking the time out today and joining us and giving us your thoughts. Talk to you tomorrow as well. That's Abhijit Phatak with his thoughts on specific markets. Remember, he's been rather bullish on what the markets would be doing. He's not been bearish, actually. That's the better term. And he believes that there should be buying done at an opportunity that comes in. So that's something that you got to keep at the back of your mind. Traders are not necessarily bearish. Yesterday, Hemant Kapadia was actually given some BTSTs in the session as well. So on the indices, mind you. So that's a couple of things that you should keep in mind. Just before we get into our research team, just want to get up what the Asian markets are doing in the session today. Remember, we have a tick of red that most likely could be the case. And the SGX Nifty 2 has indicated some downsides. The question mark is only whether we have some bit of a pullback later on in the day or no, because the globe was a fairly happy place yesterday. The only question mark remains whether it can remain a happy place and whether our markets could perform well. 10,126 is what the SGX Nifty seems to be indicating. 10,067 is the 100-day moving average for the index. So you got to keep that at the back of your mind. In a bit, we'll be joined by a couple of managements and our guests as well. I think it's good time as any to get in our research team members to talk about all the key stocks, the earnings, and some key brokerage notes that would have come out today. And Shraddha, Nikki, as well as Agam join in on our research huddle to talk about that and more. Some very interesting results, of course, by the way. Sandur Manganese was one of those, but I'm sure Nikki will probably talk about that. Some key stocks in news. And then, of course, the brokerage note that I think Edelweiss has got out on the dairy sector. All three of you, good morning. Nikki, let's start off with the numbers that came out yesterday.
Sure. So the first one that we're picking up is Sandur Manganese. Good set of numbers reported by the company. If you look at the top line growth, that's a 88% growth that we're looking in top line at a number of roughly 144 odd crore. And the net profit for that matter, that has given a threefold jump at a number of 28 crore as compared to 9 odd crore. EBITDA for that matter, that's a 3.5 folds jump that we're looking at for 43 crore. And margins for that matter, they have expanded at 30% as compared to a number of 16% that we saw in the corresponding quarter. Now, good top line along with your cost saving techniques has aided the operating performance of the company. If you look at the employee expenses, that as a percent to your net sales has come down significantly. And also the other expenses for the matter, they have also come down. Other income, however, has jumped by 9% on year-on-year basis. However, if you look at the other set of numbers, we're looking at average numbers coming in from Lumax Auto Technologies for that matter. And we are not seeing some amount of good numbers. Actually, two companies not reporting a good set of numbers. A is FIAM Industries, and the other bit that we're looking at is for Co-CIO for that matter.
Okay, so some key stocks to watch out for. FIAM, a poor set of numbers. Co-CIO, I don't think impressed too much, but Sandur Manganese could well turn out to be the stock of the day. Let's wait and watch. What about the stocks in news, Shraddha?
We're talking extensively about the auto component makers today, but of course you'll have Bharat Forge and RK Forgings also, which might react to the North America Class 8 truck sales that came out for the month of November, up 68% on a year-on-year basis compared to last month of October. They're down about 9%. Bank of Maharashtra, their QIP issue opened yesterday. Their floor price has been fixed at 26.89, which is about 3% or so premium to yesterday's closing price. So we could see some minor positive reaction there. You have Eros International PLC, which has announced a $100 million equity-linked financing to repay some of the debt. Now that is the holding company of Eros International Media, which is listed here. So we need to keep an eye out for that one. You have Kirloskar Oil Engines. Here there's a Mint report which says that the Kirloskar Group is looking to sell a controlling stake, and they're in talk with some PE funds and strategic buyers as well. The transaction is expected to fetch more than $500 million. And lastly, Just Dial, on the back of bulk deals where HDFC Mutual Fund has been lapping up shares. They bought 1.3% stake yesterday, while Sequoia Capital sold 0.7% stake. So all of those need us to watch.
Okay, but maybe the stock to watch would be Sandur Manganese. And just before I get in, Agam, with the brokerage note, let's just get in the management of Sandur Manganese. Mr. Sheikh Johnson right now to talk about these numbers. Mr. Sheikh, thanks so much for taking the time out and joining in. Now, obviously, the revenue uptick of nearly 100% leads one to believe that that would have been the key reason why the numbers look so good. But take us through what were the drivers for this growth and whether you can continue doing the same quantum of growth for the rest of the year.
Two main reasons for this better performance in this first half. One is that silico manganese, which is our ferroalloy product, has done better than the average of last year. There's been good increase in the prices of silico manganese, though the coal prices have more or less remained the same, which is used for power generation for a captive power plant. But the silico manganese has done well. That's one reason. And the second reason is that there is a slight, about a 5% increase in the overall iron ore prices during the year. They have just been 6 months compared to last year. And thirdly, and the most important thing is the production of iron ore as well as silico manganese and manganese ore. We have produced more than what we did last year, thanks to the permission being given to increase our limit of production and continuous operations of the Kerala plant. So increase in production, but slightly better prices in iron ore and manganese ore, and a good increase in price of silico-manganese have been the main reasons.
And your cost control measures would probably have worked as well, Mr. Sheikh, because as I see, other expenses as a percentage of net sales have come down. Employee benefits as a percentage of net sales as well have changed a bit. What's led to this cost control?
That's a direct result of increase in production.
Okay, fair call. So what do you expect your margin picture to look like? You clocked in margins of 30% for the quarter. Is it possible to predict what you do annualized for FY18?
As of now, we expect to just continue at the same level and repeat this half year.
Wow. Okay. In which case, if I may ask you, sir, your net profit for the quarter at least was about 28 crores. What would be a good estimate for FY18 as a whole?
PAT should be in the region of about 80 to 90 for the year.
80 to 90 crores for the year. Okay, fair call. One last question. What about pricing? I mean, how do you expect the pricing to be like? Because clearly it's helped you this quarter. But what's the sense that you have for the rest of the year, sir?
No, prices should remain today.
Okay.
For the next half.
Okay, and one last question from my end. What's the impact of the Supreme Court judgment on mining activities in Karnataka?
Now, the last two judgments have not yet been issued after the last two hearings, which is very important for us, and that is on relaxation of the cap and increase in production capacities to be allowed, so that we can produce what we would legitimately be entitled to. We are hoping that that order would be issued soon, and also the order regarding the infrastructural development, which would then pave the way for further increase in production and relaxation of the cap.
But we don't have a handle on the timings out there, yes. I'm guessing.
Yes.
You wouldn't know whether the judgments would come in by December or Jan or thereabouts.
Expected any time, because it is now almost more than a month since the hearings were held, so they should be out.
Well, okay. Wish you all the best for those, but more importantly, congratulations on an exemplary quarter and keep up the good work. That's Sandur Manganese. With their quarterly performance. Clearly, the management believing that this could last. 28 crores is what they've done in terms of profit after tax for the quarter, not the year really. But they expect the bottom line numbers could touch as high as 80 or 90 odd crores. Pricing trends to remain the same that they've seen currently. Okay, from Sandur Manganese, and watch out for this stock, and we'll ask Mayuresh about that as well. But just before we go to Mayuresh, a quick word from Agam. Agam, thanks so much for waiting by. But the dairy companies, could they have a good day too?
Yes, it's possible, because we have Edelweiss. They have initiated the coverage on the entire dairy space in the Indian dairy sector. First important point that they're making is that they expect the 20% CAGR over the next few years as far as the organized sector is concerned. On the back of that, they have initiated a buy on Parag Milk Foods with a price target of 340, and it is a value-added product segment for the company, which is expected to come in at around 70% in terms of revenue contribution eventually by FY20. That's a big positive. And the second one is Edelweiss on Heritage Foods. Once again, they're putting a price target of 976, and they expect a CAGR of 21% from FY17 through FY20, and this will be led by inorganic growth. So overall positive cues as far as Edelweiss goes on the dairy sector.
Okay, we'll watch out for those stocks as well. Thanks a lot for that, Mayuresh. Very quick, thanks a lot for that, Agam. Well, Mayuresh Joshi is with us. Mayuresh, we can actually start with the dairy space as well, but just a brief mention about Sandur Manganese. I don't know if you heard the management interaction as well, but what did you make of the numbers? And if you heard the management interaction, what's the call on the space, on the stock?
Morning, Neeraj. Yes, I did hear the management, and again, a large element of pricing really depends in terms of demand supply, because in the end it's a commodity driven business. But a reasonable set of numbers, and with the management expectations of the bottom line touching close to 85-90 odd crores, I think that's going to be a very reasonable performance for this fiscal year. Now, as the management was mentioning, I think the overhang probably comes through in terms of what the court judgments will be. But if they do land in their favor in terms of production caps being increased, that does create the leverage on the balance sheet in terms of asset sweating and fixed cost absorption, which can have it even more effectively. So yes, I think if you go by the management here, say, I think the momentum in the stock can continue.
Okay. What about the market mood by and large, Mayuresh? Do you reckon that even if there are some downsides, which certainly seem to be the case today morning, or if you look at the trend for the last few days, they'll get bought into? What would you be doing as a fund manager?
So to a large element, Neeraj, my own sense is that I do not foresee, as I said a few weeks back as well, a huge downfall in the markets. Yes, they look stretched in terms of valuations, but the large expectation again is that earnings should start slowly and steadily picking up, and that's the basic premise for the markets. The other elements in terms of fiscal deficits breaching 96%, lot of equity issuance is probably sucking out liquidity, do create overhangs for the market, but I do not foresee a huge downfall. Domestic liquidity is strong, it will continue to do so. So again, I think selectively buying into large private sector banks, you're looking at a few corporate facing banks as well. As I said, I think power transformers as a space looks very, very interesting to me. Infrastructure, within infrastructure, a lot of EPC players selectively who can probably execute well over the next few quarters look interesting and in a very sweet spot. Specialty chemicals is something that I remain extremely optimistic about over the medium to long term. And from a bottom-up approach, again, I think selectively looking at stocks, selectively within the mid-cap IT space, and selectively within a bottom-up approach within the vast universe. So yes, I think these spaces, in my opinion, can do well over FY18. With rural being the theme, because budget around the corner, I think even the rural-focused stocks selectively, whether they become financing stocks, or they become microfinance stocks, or they become agri-equipment stocks, can do well.
Okay. North America Class 8 truck sales numbers are out too. And Mayuresh, how would you look at these numbers? Because I agree, on a month-on-month basis, you would believe, or you would think that, oh, they're down. But look at the growth that every month we're seeing YOY on these. Does this augur well for a company like Bharat Forge, Ramkrishna Forgings, or Forgings? Do you have any thoughts on any of these stocks individually?
So large element again, I think on a low base, I think the year-on-year numbers looks exemplary in Neeraj. But on a month-on-month, as you rightly said, I think it's 9% down. But to a large element, I think you have to annualize these numbers. And on an annualized basis, the management was and is very, very hopeful over 20-25% kind of a growth. Couple that up with a lot of orders expected on the Class 7 trucks as well. I think that's going to be an integral and an important element for Bharat Forge, specifically in North American markets. What they are also doing with the PV side of the business, with a lot of commissioning happening on that front and decent order flows coming through, I think the tonnage should increase and the realizations per tonnage should also quantify over the next few quarters. So yes, I think it's a very interesting story. I think Forgings is something that I'd liked in the past, but it has moved up significantly. So yes, as a space, I think it is expected to do well. It might be a little bit disappointing for Bharat Forge on a month-on-month basis, but on an annualized basis, I think the growth still will hold good. So yes, I think if somebody holds stocks like Bharat Forge, Forging, they should continue to hold on to the stocks.
Okay. You know, interestingly, very keen to see what's happening to some of the other big movers in trade yesterday as well. There is Biocon, there is Shipping Corporation of India, there is IGL, which is gained another 4% in trade. So some of these stocks really set the stage on fire yesterday. Mayuresh, there's no direct correlation, I would reckon, between Baltic Dry Index and the shipping companies, but they tend to, find favor whenever we see movements on the positive side on the Baltic Dry. Would you dismiss these as trading plays, or could there be something more meaningful happening within those handful of companies that are listed on the Indian bourses?
No, so there are two elements to it, I think. As you rightly said, I think whether it's the Baltic Dry Index or the Baltic Clean Tanker Index, any movement on those indices, I think they do create sentimental positive impact on shipping stocks. But to a large element, I think let's understand the fact that I think there is going to be a lot of oversupply that will still continue over the next few quarters. And again, I think the rates probably, even though they've gone up on a quarter-on-quarter basis, are way above, are way below rather on what we've probably seen at peak levels. So the kind of costs that these shipping companies incur on a daily basis, I think the kind of rates that one really needs to get used to is something which is going to be a determinant factor. And with supply coming through, I think that probably puts a cap on that front. The second element also becomes about the fleet size and the age of the fleet. So again, I think if you look at a lot of companies within the Indian context, you are probably seeing the aging of the fleet probably happening very fast. So I think either the replacement factor has to happen, or you're probably looking at better ships expected to come through, which will take time. So again, it's more of a trading play in my opinion. I think structurally, I think the shipping industry needs a huge amount of demand drivers to probably come through, which I'm not seeing at this point of time.
Okay, interesting. Mayuresh, stay on. So much more to talk about, but it's 8:45. Let's take a small detour, talk about the technicals with Jai Thakkar, Assistant Vice President Equity Research at Anand Rathi. He joins us on the show. Jai, good morning. Thanks much for joining in. What's the call on the index, Jai? We'll start off marginally lower. In fact, now if the SGX Nifty is to be believed, we'll start off about 0.5% lower. How would you place your bets on the index today? What trades?
Hi, good morning, Neeraj. As I've been saying that, we are well into the downtrend. With whatever happens, I would say, across the globe, the overall chart structure out here in India, as far as Nifty Sensex is concerned, it looks weak. At least towards the levels of 10,020 in the short term is what I'm eyeing at. The reason for that is, Neeraj, is what I've been saying is that the initial fall which we had seen from 10,490 until 10,094 was a clear wave 1 or wave A on the way down. Thereafter, the bounce which we had seen in November series, wherein we had seen around 1.5% cut in November. So there was a fall and there was a recovery. But the recovery, halted at around 78.6% retracement of the previous fall. And that clearly indicates that was just a bounce back, a counter play, a counter trend. And thereafter, again, the next move on the way down has started. Now, the minimum equality target on the lower side for Nifty comes to around 10,020. And I think once at those levels, we need to actually watch out whether it takes a support or not, and whether it bounces back or not. If it does, and if it starts a new wave on the upside, then we might just see a short as well as a medium-term bottom out there. However, if it fails to do so, then I think, we can see much more lower levels that could be around 9,800 as well. On the upside, at present, 10,200 is the immediate resistance, and thereafter 10,300. These are the two crucial levels, I would say, Neeraj, as far as this December series is concerned. If we manage to take off 10,300, then 10,400 will also be taken off. That is what I sense, So the overall trend is down. I think any bounce should be utilized as a selling opportunity only. As far as index is concerned, Bank Nifty is going to play a very important role, Neeraj. The reason for the same is that it has taken a sharp cut, and it has reached to the levels from where it broke out. That is about 25,000 levels in the last series. And then I believe that, it took a resistance around 26,000. But now the RBI policy nearing, and 24,800 is the previous swing low. So if it manages to hold 24,800, then I believe we can see a recovery back in Bank Nifty, which can eventually help Nifty. But if 24,800 gets broken, Neeraj, then the bullish flag pattern out of which it had broken out, I would think, that would fail, which would then lead to an opposite reaction on the lower side, and thereafter we can see the levels of 24, 23.5 as well. So 24,800 is the level to watch out for till the RBI policy.
Okay. What about specific stocks today, Jay?
Well, I think, there are few stocks, which are looking good, among the cash segment. If I'm looking at it, then it's GHCL, Gujarat Heavy Chemicals Limited, wherein I think, the stock has clearly broken out from a downward sloping channel, and it can, jump towards the levels of 311, 315 in the short term. One can buy this. On the lower side, 282, 280 is a very good support. Jubilant Life Sciences really look good. It had a 2 days run up on the upside. It has broken out from a downward sloping channel as well. So I think Jubilant Life Sciences can also be bought at these levels, and on dips as well. We might see levels of around 800, 810 also on the upside going forward, at least say in a month or so. So that's the cash segment specific calls. But as far as futures are concerned, I would say KTK Bank really looks good, bad. It has broken down from the downward sloping channel, and the minimum equality of its previous impulsive fall on the lower side comes to around 143.75. So one can sell KTK Bank as well as M&M Finance futures. I would say, Neeraj, it has clearly formed a rising wedge pattern, has reversed from the upper end of the rising wedge pattern. Hence, the target on the lower side comes to around 424.50. One can sell this with a stop loss of 454.50. So these are the two short calls which I have: M&M Finance and KTK Bank.
And so I just want Jay to repeat his levels, targets and stop losses, Jay, here for the benefit of our viewers.
Sure. For the Karnataka Bank futures, one can sell this for a target of 143.75 with a stop loss of 158. And for M&M Finance futures, one can sell this for a target of 424.50 with a stop loss of 454.50.
Stop loss of 454.50. So watch out for some of these stocks as well. A bit later on in the show, we'll ask Jay about Bajaj Finance and UPL too. These are amongst the large cap names that are looking slightly wobbly. But it's that time of the show when we should talk about Bloomberg Edge. That's the special feature that we have, and we'll get in Jayesh Khilnani in just moments from now. But watch out for the commodity names, because I think that's what's been active the last few days. And I reckon that the Bloomberg terminal today has thrown up a pattern on one of the commodity names, and Jayesh seems to be choosing that chart to bring out today on Bloomberg Edge. Jayesh, good morning. My guess is it's a commodity stock, but why this one, and what's the specific rationale here?
Morning, Neeraj. Yes, it's a commodity stock, Hindalco, that I'm watching out for. That is because the Bollinger Band has, thrown up an interesting chart pattern on Hindalco. So that's called as the outside-inside formation on the chart of Bollinger Bands. But before that, let's have a look at how the actual pattern works out. Well, Bollinger Band gives you expected price range based on volatility. Remember, it's a very popular indicator amongst the trader community, and it plots the upper band, lower band based on a simple moving average. So when the bands actually expand, we are said to be in a trending market, and when the bands contract, it is said to be in a sideways market. Now the outside inside formation that I was referring to, so you have to look out for the most recent candles. The first candle has to actually close outside of the Bollinger Band, and the immediate next candle has to be within the range. So that is how the outside inside formation actually takes place. Now, looking at the chart of Hindalco, so you see that the blue line is the upper band, the white line is the moving average, and the yellow line gives you the lower band. Now, the last two candles that you see, you can see that this red candle actually closed below the yellow line, and the immediate next candle, which is the green candle, has actually closed above the the yellow line. Couple of conditions that you have to bear in mind is that this low, the low of yesterday, which was around 233, that has to be kept in mind. In case the price slips below that, then you need to take restock of that, and your confirmation of signal comes in when the candle actually closes above this high, which is the red one, which is close to 242 or 244 levels.
Okay, and just very quickly, Jayesh, back testing.
So Neeraj would have generated about 20% returns if you had given all the buy signals on Hindalco.
Okay, we'll watch out for that. Thanks a lot for that, Jayesh. So those are some interesting names. Two ideas. I think one key sell idea on M&M Finance from Jay Thakkar. The Bloomberg terminal telling us about Hindalco and a buy signal thereof. So pick and choose what you would want to do. Mayuresh, a thought on IGL. That's amongst the other stocks that has seen a heady run at new highs. Valuations, as I checked yesterday, not cheap. FY20 expected EPS, I think the stock is trading at about 19 to 20 times. So that's not cheap. But it's a stock that is being fancied. A couple of your peer groups or peer companies have come out with fresh buy reports there. What are your thoughts on IGL?
So city gas distribution companies are in a very sweet spot, Neeraj. And again, IGL is something that I've been liking for a period of time. And you're absolutely right, I think. Even if you take an FY19 consideration, it does look expensive in terms of how the earnings might pan out. But a large component is to spread these companies over the next 4 to 5 years, because as the network keeps on growing in terms of more cities and more regions getting added, the kind of volume growth that these companies can deliver respectively can be quite humongous. Secondly, even in terms of their input costs, whether you're talking about domestic gas prices going up a tad bit, they've actually increased the prices both on the CNG and the PNG front marginally. So I think it does not impact the EBITDA per SEM that you're probably looking at, and the gross margins actually remain well above those 10 rupee mark. specifically for a company like IGL. So as new cities get explored, I think the volume activity increases with capex plans and cash flows getting balanced out. My own sense is that the incremental pass-through in terms of earnings growth can be quite stupendous if one really lays out a map over the next 3 to 5 years. So yes, remain optimistic on these companies, but I think from a buyer's perspective, you need to wait for declines to probably enter these stocks.
Okay, and the primary markets are not devoid of activity. Multi-speciality hospital chain Shalby is looking to raise a little more than 500 crores from the primary markets. The Ahmedabad-based company has 11 operational hospitals in India and 6 outpatient clinics abroad. Darshan is standing by with all that you need to know about the IPO that opens today. So, Darshan, what's the company all about, and what are brokerages saying about subscription to this IPO?
Yeah, so basically it's after a long time that, a hospital company is hitting the markets. The last I think we saw was Narayan Rudale and HCG. So just to get you a brief, it's a combination of a fresh issue plus an OFS. So the fresh issue is 480 crores. So this will go into the company directly. The offer for sale is 25 crores. The promoter, Dr. Vikram Shah, is looking to sell 10 lakh shares. So that money will go to him. So overall for the public, the issue size is 505 crore. So this is the broad issue that the company has. The price band is 445 to 448. Yesterday, the anchor book was subscribed at the higher band, and the market cap in most cases will be almost 2680 crores if we assume that it gets subscribed at the higher end. The issue date starts today and ends on the 7th. So these are the broad contours as far as this deal is concerned. Now, the promoter holding ahead of the IPO was almost 98%, and that will come down to 79% post the issue. The public will get almost 20% as far as this entire issue is concerned. The other factors that you have to watch out for: 11 operational hospitals with a bed capacity of 2,012 beds, and it also had it has outstation overseas operations also. 6 international outpatient clinics also, operates in Africa and UAE. Now, basically, what the management has said, how are they planning to fund this and what are they planning to do? Out of this 480 crores, 300 crores will be for debt reduction over the period of time. A couple of brokerage notes indicated that the company wants to be debt free. Equipment capex to the tune of 65 crores, hospital infrastructure to the 11 crores. The balance will be general corporate purposes, which the management will say what they plan to do. Now, if you're looking at what the company is, first of all, it owns and operates. There are 4 basically parameters which this company operates. The first one is owning and operating the hospitals that they have. This is the first model they follow. The second model they follow is a revenue sharing model to operate and manage hospital. The third one is tie up with third-party hospitals, and that is also a revenue sharing basis. And the fourth model that they have is an orthopedic healthcare through outpatient clinic. So these are the basically 4 models via which this company operates business in. Now, if you're looking at the parameters, the other parameters, the financials of the company, basically the revenues has grown significantly, almost a 15% revenue growth. From 275 crores in FY15, it's moved to 325 crores. And in the first quarter, this is what they've given in the RHP. They have done close to 90 crores, so they should easily surpass the 325 crores. That's also the profit trend that we are seeing. From a 25 crore, from a 26 crore, they moved to 63 crore. And in the first quarter, they've done almost 15 crores. So they should actually come in par. The margins are a big surprise. From an average of 22 to 25%, in the first quarter, they did 29%. So I'll be asking the management how this they managed to inch up the margins so much. The other parameters, if you're looking at it and comparing it to the revenues from the other hospitals, it's a smaller company, 325 crores compared to an Apollo's 7,000 crore or a 4,000 crore Fortis. But nevertheless, the EPS that they do is much higher than, an HCG or a Narayan Rudale, or at par with Fortis Healthcare. Now, if you're looking at the other parameters that they have given, this is the average revenue per occupied bed, one of the best that they have, almost 34,000, slightly lower than Fortis. So they're making money on per bed that is there, and the average length of stay is also much lower than So on a parameter like-to-like basis, Fortis is slightly better than them, but revenue-wise, obviously this Shalby is 4.1 days compared to 3.6. So this much is pretty much in par. Now, if you're looking at the valuation, it's coming in at a higher price band. We don't want to compare it on a PE basis. We want to cover it on an EV to EBITDA basis, because that is how hospitals are there. So 28 times FY18 earnings compared to 27 on Narayan, and a Fortis is at 20 and Apollo is at 23. So valuation. But what makes this higher valuation? It is, the return ratios are much superior than the peers. The margins are much superior than the peers, and that is something that, just look at this. Shalby has margins of 22%. What matches is Co-CIO Medical, which is a smaller company, but Apollo, HCG, all of them are in the low double digit. ROCE of 23% compared to an Apollo 6%, 8% ROA compared to a 3%. So overall, they have a much superior operating matrix than the peers, and pretty much that is what gets them to command a higher EV to EBITDA multiple. Not too many brokerages have come out with notes. The only one I read was Choice Broken, and they have said a subscribe to the IPO. So it's 2 more days, and let's see how the IPO pans out.
Yeah, clearly on parameters, peer comparison, Co-CIO Medical probably beats it, but otherwise they are better than almost all the others. Darshan, thanks so much for putting all of that into perspective. And viewers, remember, on IPO Adda, you will get a complete lowdown from the management into a bunch of these things. Trust Darshan to ask some tough questions as well, because they are a good company from the looks of it. Let's wait and watch how the response is. We'll ask Mayuresh Joshi about his views on Shalby in moments from now as well, but the pre-open rate's about to kick in. So let's just first address those, and then we get into what brokerages are saying, and maybe a comment from Mayuresh on this new kid on the block as well. The SGX Nifty indicating about 1/3% in the red, and we'll start off, starting off marginally higher, but I believe these rates will change in a bit. Bring up some individual names. Yesterday's top movers included in Infosys. Okay, Reliance. Yeah, that's the reason why the index is up about 2%. This won't happen. Bring up Infosys, which had a big move in trade yesterday, lying slightly flat. A bit of a bounce for Indiabulls Housing in trade yesterday. Let's see if that is continuing its momentum after having a torrid Friday. It did bounce back yesterday. Let's see if this lasts or no. UPL and Bajaj Finance amongst others, and the large cap pocket which were active. A few stocks which are in news. Bharat Forge, the North America Class 8 truck sales, and let's see if there's a reaction thereof. Marginal at that, about 1% higher. Just Dial, wherein HDFC Mutual Fund has added a 1.3% stake. No, again, a very, very muted reaction. Let's see if this changes. Sandur Manganese could well be the stock of the day, to be honest. Excellent Q2 performance by Sandur Manganese. Revenues up 88%. Margins 29%. The stock 14% higher. I don't know what the eventual tick will be, but I wouldn't be surprised if the gains are closer to the higher single digits or double digits, because it's been a fabulous quarter, and the management stating that they believed that the numbers could be closer to 80 or 90 crores for FY18. That speaks volumes about how the next 2 quarters could look like as well. Remember, Sandur Manganese trades at this heightened price at a market cap of about 1,000 crores. So it's a commodity company which would be trading at about 11 times. It'll be interesting to see how the market or the verdict is on this one. Some people would argue expensive, but hey, these days almost all commodity companies are even more expensive than these levels. So it'll be interesting to watch out for. We'll look at some other stocks as well in just moments from now. I just want to bring up the currency and just see what's happening to that. The currency should come up on your screen. The rupee has open trade, and my ticker is giving me a rate of 64.29, 64.31 for the rupee. So that's a flattish move as well. Keep in mind some very unnatural rates for HDFC Bank, Reliance, etc. So we will actually revisit these as the markets settle down. For now, let's go across to Sumit Sarkar, who's joining us with the big brokerage call of the morning. Sumit.
So today on the big brokerage, it is HSBC on Indian aviation industry. Now, according to HSBC, the Indian aviation industry is on a strong point of recovery. The future looks highly profitable for the aviation industry on the back of favorable government policy, favorable foreign exchange rates, and modern fleets offsetting the cost of higher fuel, cost. Now, they're saying that particularly the low-cost carriers are expected to benefit the most, and on the back of this, they have initiated coverage on Indigo with a buy rating and a target price of 1,500 rupees. Now, according to them, the Indigo is expected to increase its market share by 5 percentage points by financial year 2020, when currently they have a market share of close to 40%. Now, they're also saying that Indigo's cost is already 15 to 30% lower when compared to peers, and with modern fleet coming in, it is expected to further reduce. They are saying that the company will continue its strong free cash flow generation going forward, and they're saying that the company's net profit would grow at a compounded annual growth rate of 37% over FY17 to FY20. Lastly, when it comes to Indigo, it is the best balance of market positioning. It has the strongest balance sheet among peers, and its strong free cash flow generation and higher dividend yield are the positives when it comes to Indigo. Second, they have initiated coverage on SpiceJet with a buy rating and a target price of 180. Now they're saying that the domestic traffic for SpiceJet is expected to grow at a compounded annual growth rate of 18.5% over FY17 to FY20. The company is also expected to regain its market share on the back of the bulk 200 aircraft order that the company has given. They're saying that the company will turn debt-free by financial year 2021, and its net profit would grow at a compounded annual growth rate of 45% over FY17 to FY20. Lastly, they are saying that the SpiceJet is expected to grow at a faster rate when compared to peers because of its new aircraft addition and its regional routes.
Okay, we'll watch out for all of these as well. So, bunch of notes that have come out today. Interestingly, even the dairy companies could be in focus early morning, but I dare say the stock for the morning seems to be Sandur Manganese, starting off really well. For viewers who are just tuning in and don't quite know what happened, Sandur Manganese came out with a blockbuster quarter, and the management has reiterated on Bloomberg Quint that they will probably do a profit after tax of about 80 to 90 crores in the current year, and pricing looks like it will remain steady. That's the reason why you have this big uptick on the stock today. What's seen some downticks the last couple of days is Reliance Communication, down again in today's trade. So some pullback that has happened on this one, 1105 currently. The other one which is doing well is, amongst others, one of them is Inox Wind. That stock continues to rise and shine, up another 5.5% in today's session. So good going for Inox Wind. And Vimta Labs, it's a small stock, may not be trading right now, but has had 2 fabulous days. Let's wait and watch if there is more in store in Vimta, for currently unchanged. Thakkar, out of the blue, Inox Wind seems to be making some very strong moves. Any thoughts here?
Well, Neeraj, this stock still has not come out of the woods, I would say, because it has not taken off its previous swing highs, and continuously since 2015, I would say, this stock is forming low tops and low bottom, and each time it has not taken off its previous high, and hence the trend has been down. Now the immediate swing high comes to at around 168, 169 levels. So if it managed to take off those levels of around 168, 169 on the upside, and then close above those levels, then we can think that yes, the trend might have changed for Inox Wind, and we can see some more upside towards the levels of 202 or 10. So till that doesn't happen, I would not recommend to buy this. Buy only if it takes off 168 to 169 zone levels.
Okay, now, a couple of stocks. One of them is Hindustan Copper that I want to talk about. The other one, though, that I want to talk about with Mayuresh Joshi, aside of the IPO, which is Shalby, is Future Retail. Now, the reason I bring Future Retail up is that the stock is at 512. It was at 653 when that strategy 3.0 was announced. 610, then the stock went up to 653. And I remember when the stock was at 647, it was a 9% uptick that we saw on the stock. That's why they probably say, don't chase the news. You chase the news, you probably got in at 630, 640. There's no saying that the stock will not go back. Will probably eclipse all of those levels. But for now, you are under the water when it comes to your purchase price. Mayuresh Joshi, I don't know what your thoughts were then, but I know of a clutch of people who had said, great news, go out and buy Future Retail, never mind the valuations. They've been caught on the wrong foot. My question, though, is this fall about this 20% or slightly more than that, does it provide a buying opportunity to a retail investor who has a long-term vision in mind? Or would you say, don't look at Future Retail because there are other retail stocks available?
No, so to a large element, I think a 30-year vision is all welcome, but I think it's too far to even put in some analytical numbers for those kind of targets. Having said that, I think the kind of numbers that Future Retail has posted in the year gone by, 16,600 odd crores in terms of turnover. The profit for the year gone by was close to around 360, 365 if I'm not mistaken. The Q2 performance was reasonably better. So I think if you're looking at a 4,500 top line compared with what DMart did at around 3,500, I think because of lesser margins, what the profitability for Future Retail was, I think it came down to around 140, 143 odd crores. DMart posted a profit of around 190 odd crores. But have a look at the dynamics that are changing for Future Retail. So if you look at the ROC, it stands around 7.81. ROEs in excess of 17% and EPS of around 7.81 for FY17, which is significantly higher on what it had done on FY16. So to a large element, I think the consolidation that we'll probably see in the acquisitions that Future Retail is doing, I think are steps in the right direction. From a valuation perspective, again, I think it largely trades around that 45 to 50 times, I think, forward band. The industry is around 80, 85 odd times. DMart is way above 100, 125. So on that comparison, I think it sounds very, very cheap. But my own sense is that I think let declines come through. I think if it declines further, I think the valuation matrix would appear far more better and reasonable. So I think valuations is something which should be very, very important for commodity retail-oriented stocks. If you get it at a reasonable valuation, I think you should go and buy it. You should not be chasing these stocks at higher multiples because they will contract in the near future, because the quantum of growth that can come through is something that can get predicted in a band.
Okay, watch out for some of these. But just a quick thought on the new kid on the block, Shalby, Mayuresh.
So I think Darshan gave a brilliant analysis. So I think should I call him Dr. Darshan from henceforth is something that I'm wondering at this point of time. But a large element, I think, Neeraj, is that the parameters look very, very attractive at this point of time. And yes, I think the comparison that he did with Co-CIO Medical, I think, seems to be apt. But again, let's understand that they are operating out of less number of hospitals compared to the larger players who probably are managing their own beds. They are managing and outsourcing other beds as well. But utilization levels, the average revenue per operating bed, the turnover time, I think these are all important factors and facets that one really looks at as more and more expansions start taking place. And it is a time-consuming process, because I think the payback period for new hospitals is a lot longer than what the old hospitals will probably do. So yes, I think parameters in the right place, but I would love to hear the management in your IPO order section.
Okay. Thanks for the vote of confidence, Mayuresh. Let's just stay on. So much more to talk about. We'll take in some final thoughts from both our experts, but it's that time of the show wherein we get in all that you need to know to stay ahead in trade today. Dish TV, Harrison's Malayalam, Lux Industries, Banali Petro, Orient Bell, Plastibands, Rane Holdings, and interestingly Bike Hospitality, amongst other stocks that will report results today. Strong quarter for Alpha Geo, FM Industries and Sandur Manganese in particular. And these stocks are likely to start off on a strong note. Slightly weak quarter for GOCL as well as GPT Infra Projects. Bharat Forge and Ramakrishna Forgings in focus as North America Class 8 truck sales rise 66% in the month of November on a YOY basis. HDFC Mutual Fund buys 9 lakh shares of Just Dial at 500 rupees per share. Shipping Corporation of India, Growth Investments and Sequoia Capital sell their stake. Majesco, MB Industries and Bata are meeting large institutional investors in today's trade. And lastly, HSBC initiates coverage on aviation stocks, while Edelweiss initiates coverage on some other dairy companies like Parag Milk and Heritage Foods. Okay, in just moments from now, we'll also get in Mahesh Patil as well. But some final thoughts, really. I'm just looking at what's happened in the pre-open session, and there is hardly any movement in the large caps. ONGC is arguably the top loser, at least on the large cap front. Or the broader end of the spectrum too, not too many stocks moving around, I must say. There is a Lakshmi Vilas Bank which is down 8%. But that notwithstanding, I'm trying to see if there are gainers. Hardly anything. Videocon is the top gainer on the Nifty 500, followed by Omax and Inox Wind. So not particularly confidence boosting stocks which are moving around in the session. Just be mindful of these. Mayuresh, any thoughts on dairy? Any stocks that you like here?
So Parag, Prabhat, I think ultimately I think the organized players will do well, and you're probably talking about the value-added products doing the trick in terms of the earnings profile actually improving for these companies, because value-added products, as the percentage increases, the kind of margins that they can generate are far better than the traditional milk products that they operate out of. So yes, I think a lot of focus from the management is towards these value-add products. And as the proportion increases because of the margin increase and improvement, the leverage will probably start coming through on the bottom line. It's a consumption story. I think consumption is here to stay for India. So yes, I think remain positive on the sector and these stocks in particular.
Okay. Okay, Mayuresh, thanks so much for joining in and giving us that perspective. Always good having you. Jay Thakkar, 1 minute to go, 30 seconds. If you had to bet on one stock for the day, which one would that be?
Well, that would definitely be, among which I've, already mentioned, and it's going to be GHCL. If it is just one stock, then I think, among the cash segment, this is one stock which has really seen that kind of a breakout as well as increase in volumes, which clearly classifies this stock for a short to medium term buy. Despite of whatever market conditions are, I think there is one more leg pending on the upside for GHCL, and we can see the targets of around 311 to 313.
Okay, let's wait and watch what happens to GHCL. That's Jay Thakkar's top call for the morning. Jay, just stay on. We'll take in one quick thought from you once the market opens as well, but 30 seconds to go for the markets to kickstart trade. Remember, watch out. The SGX Nifty has shown its hand. The Nifty pre-open rates have also shown that we'll start off marginally lower. The question mark only is about what happens during the course of the day. We have a very important market voice coming in as well. Mahesh Patil will be joining us in moments from now. Would be interesting to get his thoughts as well. But this is what's happening this Tuesday morning, December 5th, a day before the RBI credit policy. The Nifty starting off marginally lower, the Sensex about 60 odd points, and the Nifty Bank, which showed a bit of a spike up in the last 15 minutes of trade, is also lying fairly dormant, so about 30 odd points. No big moves really on the Nifty Bank too in the session today. The broader markets, the Nifty mid cap and the small cap should come up on your screen. I doubt there'll be too much of a movement there. No, lying fairly placid really for both the mid caps and the small caps. So a bit of a nothing out here. Bring up the heat map. I would guess even Stevens maybe a bit more red, and yes, a bit more red. But you would probably argue even Stevens because there's hardly any stock which is moving around. Bosch is the top gainer, about 0.75%. Otherwise, no gainers there. In terms of losers, I don't know if Wipro is getting spooked for the last 2 days because of this news of the lawsuit, but that is clearly putting pressure on the stock the last few days. So Wipro is down. NTPC is down about a couple of percentage points. But no, otherwise there is hardly any movement there. Bit of a gain for Bharti, but that's about it. So even Stevens, I would still call it even Stevens, even though there's a bit more red on the screen, but there's hardly any movement that has happened. Just that we are now down about 0.25% for the Nifty. You would expect that the index would stay quiet ahead of the policy tomorrow. The Bank Nifty would stay quiet ahead of the policy tomorrow. And maybe, just maybe, the markets would now be waiting to take cues from the Gujarat election, because that's probably the more important thing to watch out for. A few stocks that I want to bring out, which could be reacting to news or otherwise. Firstly, the top movers of trade yesterday. Biocon flattish. Shipping Corporation of India, which went up 8-9% in the last half an hour, lying flat. IGL knocking at new highs every single day, and this stock is up about 1% as well in the session today. So that one is starting off okay, the other is not so much. Let's bring up the stocks in news. Firstly, higher truck sales, and do they benefit Bharat Forge and MM Forgings? Well, and maybe Ramkrishna Forgings, but Bharat Forge is starting off on a good note, so good start for that one in trade. I think the stock of the day would probably be Sandur Manganese. That will come up on the screen. A couple of other stocks will come up on your screen, because those are the ones which are moving the most in the session today. Earnings impact seen on Sandur Manganese, up about 12 or 13% in trade. So good start to that one. Remember, the management told us today early morning that they will probably clock in PAT of about 80 to 90 crores, and the pricing cycle seems to be steady. So Sandur Manganese is one more stock that is in focus. Last but not the least, Just Dial. HDFC Mutual Fund has bought some stake. Stock lying fairly dormant in the session today. Okay, let's get in opening thoughts though. This is one more stock, by the way, Kirloskar Oil. The Mint reports that there is some stake sale talks. The stock is up about 2.5%. But let's get in opening thoughts from our special guest for the morning, Mahesh Patil. Needs no introduction, joins us right now on the show. Mahesh, good morning. Thanks for joining in. What's the sense? Do the markets stay quiet ahead of what is turning out, or what could turn out to be a very heavy data month? One, the policies from central banks, to the Gujarat elections as well.
Yeah, I think the markets look like taking some pause over here. And after a good run we had year till date, this is one of the fantastic runs in the market. I think clearly looking at some of the events which are there. And also, if you look at globally also, we've seen some pause in the Asian markets, emerging markets. And while this quarter numbers have been good, we have seen after a long time surprise to the earnings, and I think that trend will continue. So I think the outlook remains positive, but I think some pause, mild correction from these levels can be the one can expect that. We've also seen a lot of supply of paper in the recent past, so that has taken away some of the liquidity or cash which was there in the domestic side. And yeah, so I think that's one of the reasons why we're seeing that market kind of remaining sideways or some mild correction at this point in time.
Mahesh, so would you, I'm just wondering, the central bank action, actually let's talk about the central bank action first. If the RBI MPC on what most popular people now believe would be a status quo comes about, and the Fed does what most people expect it to do as well, how does that change, if at all, any kind of investment outlook?
I mean, I don't think those things will really matter so much because they are already discounted, and I think it's more to do with any other kind of a surprise, okay, which can be thrown up, whether it's in the elections or some other global factors. And again, we are now closing for the calendar year, so you'll see activity from FIs will be slightly muted. Normally in the month of December is what we see, and people will start to look at their strategies for the next calendar year. So I think that's where I think you will see again action beginning at the beginning of the calendar year CY 18. Until then, I don't think some of these, I mean, policy rates are going to matter. We don't see any change in stance over there. And rate hike in the US, I think it's more or less given. I think people are expecting next year another 2 to 3 rate hikes or so. Yeah, again, how the data points in the US pan out. I mean, it's looking that US economy is looking at a pretty good kind of a growth rate. And on the back of that and the tax cuts which have been announced, I think how the outlook for growth and corporate earnings in the globe shape up would also to some extent determine how the emerging markets and other markets do. So if US does well, corporate profitability is good, there's a strong demand, it's good for a lot of Indian companies, exporters also, which could help to kind of increase in the overall earnings outlook also for a few companies.
Okay. Now, well, but to be honest, the last 5 or 6 odd months, you guys have mattered more. I mean, the FIs have been virtually absent. My question to you would be, what would your thoughts be about how would you approach the new calendar? I know you don't approach years in that fashion, but with all that's happening on the macro front, the numbers look like they'll probably pick up in the next quarter. Earnings look like they will probably pick up in the demon quarter for the base that we have, but valuations are where they are. You getting the money that you're getting, are you investing all of that currently?
Yeah, so I mean, our job is to continuously look at opportunities in the marketplace. I mean, there has been a steady inflow of funds all throughout the year. And while we take our time to look at companies, evaluate them, and try to get at a better entry point at every point in time. So yeah, clearly we are not in a rush to invest that money. Taking our time, screening companies, especially after the quarterly numbers. If there is any change in the outlook, we have seen that quite a few sectors which were a bit outlook was negative have kind of bottomed out. So there is some change in the portfolio. Like for example, on the banking sector, we have seen the corporate banks now with some amount of resolutions coming through in the next quarter or so. Yeah, and with bank recapitalization, yeah, there is a belief that you will see deleveraging in the corporate sector, and that should, I mean, improve the outlook from a say medium to long-term perspective over there. In telecom sector, we've seen things kind of bottoming out, consolidation happening much faster than we expected. So we're turning slightly positive from a longer-term perspective. So I think those shifts and since the breadth of the sectors is now improving in terms of outlook. Yeah, so we are trying to more broad-based our portfolio as we get the inflows.
So, Mahesh, interesting, you brought up those points, and I just want to talk about 2 of those. One, the corporate-facing banks. Would you continue favoring the private sector 3 or 4 large ones that we have, or would you even look at the PSUs which have this corporate exposure? And there is a bit of a tailwind to that too.
Yeah, so we've always liked the private sector banks because especially the better managed, more retail focused, because that way we feel that the growth will be much faster. There's a lot of penetration which you can drive on the retail side.
Yeah.
And so those are long-term compounding stories which will do well. Obviously, they're expensive because the outlook there is much more positive. But yeah, I think probably now with this cycle, we think the economic cycle is kind of at its bottom. You will see some pickup in credit growth. And the NPA cycle is also peaked out to a large extent. So yeah, selectively some of these corporate banks and also some of the PSU banks where it's not necessarily the capitalization, but okay, where we think that the management is also probably trying to do some changes in the way they are doing business, and would be able to come out of this cycle much stronger. So I think very selectively in the PSU banks we are looking at that, but we don't see that PSU banks can be a broad-based kind of a story which one can play from a longer term perspective. They would have challenges in an environment where we are seeing the banking sector itself going through transformation, digital, and some of these banks are not so well equipped, and they might not even have the capital for growth. I mean, they might just get barely capital to survive.
Yeah, that's true. If I can ask you, Mahesh, what's your view, and you might have liberty to not answer.
Yeah.
What's your view on these two sectors that have gotten formed? One is insurance, the other one is AMCs, and with the HDFC AMC IPO slated to come out, we'll now have 2 of the top 5 of your breed being listed as well. Any thoughts here?
So again, the insurance sector, both the life insurance as well as the general insurance sector, again offers, it's again a part of the whole financialization of the savings, what we are seeing, whether it's the AMC or the insurance business. And that's a trend which we think has set in, I mean, after the demonetization, and is likely to continue for a longer term. So I think from a top-down perspective, the sector looks fairly good in terms of growth. And
looks good like for the next 5-10 years. I mean, I'm just trying to figure out if you think of these as compounding machines for a really long time.
Yeah, I think so. Yeah, I think they looking at the penetration levels, okay, where we are, and as I said, the financialization of these savings. So it looks to be a like next 5-10 year kind of a story. Okay. Obviously, valuations can be a bit stretched in some of the sectors. We saw the insurance companies, they came with the IPOs. They haven't done that well except for one of them.
True.
And that's because of at what price you enter. But I think as a longer term story, I think that continues. And especially the general insurance sector is where we are more positive on, because there we think that there are new sectors which are opening up. The regulatory environment is also kind of becoming more favorable. So that looks to be a more exciting space within the insurance sector. And the asset management business is seeing an unprecedented kind of a growth this year. And looks like this will continue. I think looking at the retail inflows, the penetration drive, I think we are at an inflection point where we see a lot of markets where the move from retail investors or savings into financial markets and more into equities has grown. So I think we are at the inflection point where we would see that percentage which ownership is still very, very low going higher. And these are businesses, again, we don't require capital, very high return businesses. So if at adult there is growth and good free cash flow generation, I think they can create immense amount of value. Obviously, you have to bet on the right company, because not all are going to do well. The top 1 or 2, 3 players are going to really take the larger share of this overall pie.
Yeah, well, that's well said too. I was just wondering, where do you, as the CIO, as the man who's managing the whole pie of business, and I just want to bring up a couple of stocks here, just bring up the markets here before we get back to the next question for Mahesh. Remember, they're lying very, very flat. No moves out there. The Nifty Bank in particular, just about 0.25% lower. So nothing dramatic happening there. I think a couple of these stocks, including Infosys, are probably holding fort currently. But more importantly, Mahesh, where do you look to, or where do your fund managers, let me put it that way, look to generate alpha? What would you be advising them right now? Because one is the steady state 10-15% growth that you'll probably see. I mean, I don't know if you're pricing in higher for telecom or banks or otherwise, but that is that steady state growth which will happen. If earnings were to grow at 20%, which is what most sell-side people are penciling in for FY19. I don't know what your thoughts are. I would want your thoughts there too. Do you believe 20% earnings growth for FY19 is possible? And if so, where do you, as a large house, look to generate alpha?
Yeah, so I think to answer your question about earnings growth, I think we think that this is this quarter, last quarter, is a kind of a turning point in terms of earnings growth, which has been pretty elusive up till now. But I think a lot of pieces are falling in pace at this point in time, and I think around 18-20% growth looks fairly plausible next year, because a lot of the sectors are coming in from a very low base. I mean, look at the corporate banks, the telecom sector, the pharma sector. Again, the base is very, very low over there. And as I mentioned earlier, we are seeing a broader participation across sectors which were not doing well. So I think that gives a much more credibility in terms of the growth what one is looking out for next year. So that the second part of your question. The first part of your question in terms of where we are trying to really managing in this kind of environment, I think our outlook is that the market from here on, we're not expecting very large returns from the market. So any kind of a return, especially in the larger good quality names, if you are able to see a return of around 15-20% with good amount of visibility, I think that's a good return to look for at the stock level also. So I think it's important to look at companies and get a firm handle in terms of earnings, where the earnings certainty is there and earnings growth is slightly better than the broader market. Other sectors and stocks where we would be focusing on. And that will probably be expecting better growth in, say, the consumer discretionary side. Again, the cut in interest rates, rising rural incomes would lead to, and also the shift from unorganized to organized. We have not seen that much, but I think you will see that as GST gets totally compliance starts to happen much stronger next year. So that's the sector which we're seeing a strong growth coming in. And at the same time, we need to be some contraplays in the portfolio, which can surprise positively, say a bit in the corporate banks or even telecom sector, which are currently depressed but can surprise over the medium to long term.
So that's your contra, PSU banks and telecom?
Yeah, in a limited, again, we're not going to go too aggressive over there.
Sure.
We will want to watch how things pan and then slowly build exposure over there.
Anything that you are anti-consensus, you don't think that the market is pricing in right, either on the upside or on the downside?
I think not many actually anti-consensus, because markets is very finely pricing everything at this point in time. Okay. So the first time we are seeing not too much distortion in the market. I think sectors which are doing well are already pricing in the right valuations. Sectors where the outlook is not good are slightly subdued. So not seeing much. In fact, in our portfolios also, we are not seeing a very large tilts or very aggressive call on any particular sector at this point in time.
Okay, great. Mahesh Patil, one last thought. With an assumption that we don't see any negative surprises from any of the macro events that are slated to happen, you would presume that any large correction will get bought into? You would be a buyer because you guys are the ones which are putting in the money right now. If the market were to correct about 4-5% from these levels, would you be an active buyer?
Yeah, so I think if the outlook on the market remains positive, we think this is a market where you should see making newer highs. And the outlook also on the sector is now improving. So any correction, it will give an opportunity to really buy stocks at a more reasonable valuation. That's what we are looking at. So I think clearly good companies, if they correct whatever 4, 5, 6%, would be a good opportunity for us to look at deploy some of the cash which we have, but also for investors to really buy into that correction. Because if you're expecting around 12% kind of a return, if you get something 4-5% cheaper, that increases your return expectations for the year. So I think this is a market where I think while it's kind of expensive, but we believe that we are coming in from a very, very low base. So we are at the bottom of the economic cycle, which will improve. So even some amount of derating happens in terms of PE multiples. I think markets can still, because of stronger earnings growth in the coming years, can give fairly decent return if expectations are fairly well balanced from this market. And any correction would be a good entry point to enhance those returns.
Great. Mahesh Patil, thank you so much for taking the time out and joining us right here on Bloomberg Quint on IndianOpen. Appreciate your time. Okay, that's the view from Mahesh Patil. What we do is slip into a quick break with the news that the index is now trading at the lowest point of the day. Come back and talk about the steep hike in iron prices with TRK Rao of NMDC and business opportunities in the smart city and defense sectors with Anand Agarwal of Sterlite Technologies. Stay tuned for those.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people. Welcome back. You're watching Indian Open. Now, the country's largest iron ore miner, NMDC, hiked prices by as much as 13% last month. This despite dispatches falling over the past few months as demand has remained muted. To talk about the future of both prices and demand, we're joined today by TRK Rao, Commercial Director at NMDC. Good morning, Mr. Rao. Thank you very much for speaking with us today. Let me start by asking you for your outlook on prices. I was just reading a Bloomberg article which suggests that the curbs that China has put on some of its steel factories, etc., suggests that iron ore may be entering a bull market and that we could see substantial price gains from here on. Would you agree?
Yeah, good morning. First of all, thank you very much. If you see the domestic demand has been quite good this year compared to last year. The steel consumption has been grown around 4.1%. And then all our customers, especially the Vizag Steel Plant, the SR, they are doing very well. They are in double-digit growth, more than 25%. So there is quite very good demand in the domestic market because of the good demand in domestic market, and also considering that our competitors like the Orissa miners have increased prices. We have increased our prices in the month of December. And if you see our sales, in the first 6 months, we have done record sales, the best ever sales in the history of NMDC. That's primarily because of the good domestic demand. And in the coming months also, the sales will be very good. You said that there has been some decline in sales, but that primarily happened in the month of October due to an accident on the KK line that has pulled down our sales, and it has nothing to do with our demand. As far as the prices are concerned, yes, the price outlook remains quite positive. The Chinese mills are in a very stronger position. The margins, the HRC and the rebar prices have gone substantially high. And even the low-cost mills are in the order of around $270 per ton mill margins. Down the lane, given the sintering cuts and the rebalancing in supply and the supply side cuts, I think the outlook for prices globally and domestic looks to be quite positive.
Could you give us some idea of how much more room there is for prices to move up here based on both those two factors that you've just described, which is buoyant demand domestically and a conducive price environment globally?
As you know, it's very difficult to hazard a guess on exact numbers, but they would be range bound. Now, I think in $4-5 range, the international prices could be there, and compared to the current levels of prices. And NMDC price also, yes, we also see a good outlook in the coming months.
What about volumes, Mr. Rao? Good morning, because if I look at your production and dispatch figures, they have come off from the levels that they were at the start of the calendar, or even November and December 2016 or 2016. Why is this happening, and what's the outlook there?
Yeah, as I had explained to you to your earlier question, the volumes have come down primarily because of the evacuation issue on our KK line. That's our major transportation of iron ore line. And there has been a major accident. Now that will be over on December 12th, and there will be normal movement of railway rakes. this will definitely push up our sales, and we are hoping to make up. And last year we did in this second half around 18 million tons, and we hope to do the same thing and beat the last year record. Last year we did 35.6 million tons. This year we hope to end up at 36 million tons.
And you would reckon that with all of those issues out of the way, the year after this would probably see a substantial growth over FY18? Is it possible to predict that?
Yeah, we see a robust demand, especially from our customers, because RNL has expanded, the Zindals have also expanded. 18-19 will be definitely a very good year for us. And we also have all the production capacity to catch up with the demand.
One question on this steel project of yours as well. Almost, I mean, at least the couple of brokerage notes that I read, including the one that came out yesterday, did mention about how while it's delayed, once it starts, it will be a highly profitable venture for you and could be a key component of what happens to your profits going ahead as well. Any timelines that you would want to share, any numbers that you would want to share about what does this steel plant, once commissioned, do to your top line, bottom line numbers?
No, that would be very difficult to say right now, because we also have to factor in a lot of raw material costs. It will not be, but the advantage of this Nagarnar steel plant is it is location-wise, strategically located. It has a link with iron ore mines. So in terms of geographic location, it's quite well strategically placed. So we look forward that will be very cost competitive in a very competitive steel industry.
And does it start off, sir? I mean, any timelines thereof?
Yeah, it's going to start. Now our primary focus is on commissioning this Nagarnar steel plant. We are fast tracking it and we would like to commission it in the first half of next year.
Mr. Rao, you're currently running, according to some brokerage reports, you're currently running at what, 80% capacity in your mines, and they're hopeful that you should be able to take that to 100% in the next couple of years. Would that be a fair estimate?
I should say around 90 to 95% would be our capacity utilization. Because we have an issue of the Supreme Court ban in Karnataka. Though we have capacity, there's a cap on the production capacity in Karnataka. So we won't be able to achieve the 100% capacity there.
So what is the plan in being able to then access more mines once you've hit 100% capacity, or 95% capacity, let's assume factoring in the Supreme Court ban, in the next few years, in being able to expand your mining operations?
Yes, if you ask, I mean, if I can tell you the state-wise, Karnataka, we are around 12 million tons. If the Supreme Court ban is lifted, it would go up to 14 million tons.
Right.
In Banadilla, that is in Chhattisgarh, we are on 27 million tons, but we have capacity to go up to 37 million tons.
Okay.
And down the lane in 21-22, our plans are to produce 67 million tons.
And all of this without being able to access newer mines, is that fair to ask? Now, I know that there were certain mines that were supposed to go up for auction, this year or next year for the private sector. But what is your mine expansion plan besides the capacity expansion plan for existing mines that you've described?
All the 67 million tons would primarily come from our existing greenfield as well as brownfield mines.
Right.
And we have got leases for all these mines.
And
so the extra, anything beyond 67, we are planning to acquire in Orissa and Karnataka, either through auctions or through a government dispensation route.
So that's exactly my question, sir, is that, that plan to acquire further mines, can you give us some idea of what the potential timeline is over the next 5 years for that? What kind of mining, options are you looking for? When will all of this happen? Any details that you can give us on that front?
As you are aware, actually, these mines allocation now is completely done through auctions.
Right.
And the commercial mining auctions in iron ore have begun in Karnataka. We did participate, but we didn't succeed. And we also participated in Orissa. So there are two routes under which NMDC can get its mines. One is auction route, another is allocation route. When auctions comes, wherever the mine is good, we are participating. And we are also trying with the various state governments for allocation also. And in fact, we have a plan to approach Karnataka government and Orissa government for allocation of mines.
And what are the chances that you might get any? And which specific mines are you looking at? What kind of capacities would they have in Karnataka and Orissa?
Those are still in discussion. Yeah, we are only talking to state government. We'll give you the exact details as the days go.
Okay, so at full capacity of current mining abilities, you said you'd be at about 67 million tons, correct, sir? In the next 2-3 years?
Yes.
Okay, and then thereafter, in the course of the next 2-3 years, you will have to either acquire or be allocated for the mines. You're saying when it comes to allocation, you're already talking to the Karnataka and Orissa governments for allocation of mines. When it comes to acquiring mines in the auction process, what's the schedule for mine auction from here on? Because certain mine auctions were delayed or cancelled because of not enough demand at that point in time.
No, actually, the mines are again coming up for auction.
Right.
Now we have to wait and see when the government notifies it. And another state what we are targeting is the Jharkhand state, which I
for allocation of mine. For allocation.
Allocation. Yeah.
For allocation of mines. So you're looking for mines to be allocated in Karnataka, Orissa and Jharkhand. Can you give us any idea of the details of what kind of mines you might get your hands on from these 3 states? How they may add to capacity?
Primarily we focus on the viability because we conduct detailed exploration and based on that we zero in on a particular mine. It all depends on various factors. So we have to identify the viable deposits. So in Jharkhand also we are progressing. In Karnataka also similar way we are progressing, and in Orissa also we are progressing similarly.
Okay, a quick final question from my end, sir. There was some delay or cancellation of mining auctions in the recent past because there was not enough demand. Do you think that's likely to change next year? What is your assessment of when the government might be able to auction mines and what your participation or participation from the private sector is likely to look at if this comes next year, since it's going to come on the back of a good year for both iron ore demand and for steel production?
Yeah, you see, it all depends on what particular mine is coming for auction and how it suits a particular industry. So it's very difficult to say, suppose a particular industry would be close to that particular mine and in logistic terms, and otherwise also the mine quality of the ore is very good, then they may bid aggressively for this. So these factors do vary depending on which type of mine is coming for action. We cannot just say in a general way that this particular mine is good, which particular mine is not good. We have to look at from a holistic perspective.
But there was some identification of the mines that were likely to come up, right, sir? So wouldn't you know already what kind of mines, which mines would specifically come up for auction next year?
But they need to be notified, na?
Okay.
Once the state government notifies, then we will have all the exploration data available with us. Based on that, we will take a call.
Okay, so my question being this, that, and I'm taking a slightly more medium to longer term outlook, all the efforts the government has made to help the domestic steel industry revive, have paid off in terms of better demand, etc. for you, definitely in the short term. What is the medium to long term outlook? Do you believe that you will have to go in for aggressive mine acquisition over the next year or two to be able to augment capacity because you believe that the demand outlook is going to be very robust for the next few years?
Yes, that's what we are planning. Considering the national steel policy, which targets 300 million tons of steel by 2031-32. So we also plans to expand our mining capacity. That's why we are going beyond Chhattisgarh, Karnataka to Jharkhand, Orissa and other states.
All right, fair enough, Mr. Rao. Thank you very much for sharing with us all those details this morning. And thank you for your views on Bloomberg Quint.
Well, that's interesting. From NMDC, and clearly no certainty about pricing, but believes that the volumes will head up higher. Moving on to the government's push for Digital India and BharatNet, which has given a special boost to optic fiber suppliers. Add to that, smart city and defense contracts and Sterlite technology seems to be in a sweet spot. To discuss the business opportunities for the company, we are joined by Anand Agarwal, CEO at the company. Good having you, Anand. Thanks so much for joining in. You largely called an optic fiber company, but you guess you're moving away from being a pure play optic fiber company to doing other things as well. Would you want to clarify about what all are you doing currently?
Sterlite Tech is now becoming a company which is beyond fiber. So fiber and cable continues to be a large part of it, a big part of our strategy. But we are moving towards becoming a company which is in the business essentially for our customers of data transmission and data monetization. So we're becoming more and more a company which is looking at designing the new networks, the new web scale networks of tomorrow, designing it, building it, monetizing it, as well as managing it. And we've started doing it for a few of the cities. We are doing it for some of the telecom customers. And the entire focus is essentially moving towards as more and more data is going through the network. The networks need to be thought of, designed in a very different way. Us having a core fiber background, that's where the transmission of all the data is happening. We are building layers on top of it with our services vertical, with our software vertical, which is focusing on operations as well as billing support. So we're becoming into a company which is designing, building, and managing data networks. And we are doing it with our offerings, which is integrated from fiber, services, and software. So you're right, Neeraj. It's shifting to be a very different company than, say, what it was 5 years ago.
Yeah, but Anand, will that become a larger part of your business in 2-3 years? Or is that in some sense quite a few years out?
What's great for us is essentially that both the parts of the business are growing. The fiber part of the business is continuing to grow with 5G coming in. The cell sites are getting closer and closer to the consumer. And all these cell sites need to be connected by fiber as the backbone. So you have almost 10 times more cell sites, all cell sites to be connected by fiber. So fiber business is showing a great degree of growth. The services business, which is essentially about designing this network on which the data communication for city, things like surveillance, things like parking, things like traffic monitoring start getting put on that platform. And then towards moving on for alternate customers, towards monetizing, towards billing, starts becoming important. So relatively for us, today services and software is about, last year, only 25% of the revenues. Because of a smaller base, the growth will be faster for services and software. But our products business also will continue to grow as we continue to look forward.
Okay, since you're talking growth, Anand, what's the compounded annual growth rate that you envisage for your services business and for your products business individually?
Neeraj, will be if we last 5 years we've been growing at our CAGR for revenues has been about 28% and EBITDA has been about 40%. And that was based only on the growth that we saw in the products business, essentially. That was essentially a growth which was in a market which was transitioning from 3G to 4G at a global level. As 4G shifts towards 5G, there is much more fiber required. And our offering starts creating the data networks itself. And that's why really the growth that we see as we move forward will definitely be faster than what it was in the preceding 5 years. We do not per se give out numbers or have plans because the market is so much evolving. We are essentially looking at opportunities. We are essentially looking at our ways of participating in it. And then the revenue just follows, revenue bottom line just follows from it. So one guidance, one thought process, one direction that we have set for ourselves was that we create a $100 million bottom line by FY20. So we are looking that as one level of guidance, but beyond that, definitely the growth will be faster than what we have seen in the past.
That's good to know. Now you reiterate your PAT target, or you reiterated your PAT target of $100 million by FY20, and that would mean a 3x jump in 3 years on that base of yours and on the back of your H1 performance of 120 crores.
Yeah, 3-year jump of 3x translates to a CAGR of about 50% at net profit level. And as I said, we have been delivering almost 40% at EBITDA level. And because the operating leverage is so strong, we believe 50% CAGR at net profit level should be achievable. And that's a direction we have set for ourselves. And it's based on a much stronger tailwind. It's based on a much different set of capabilities that we have as a company. And it's based on a much larger scale of customer base that we are looking at. In the past, the customer base was essentially telecom providers. Now it's telecom providers, it's defense, it's cities, it's new MSOs or cable TV providers, it's the new emerging internet service providers, and with a wider range of services. So with a broader set of customers, with a broader set of offerings, and the broader perspective, the data part, which drives our business, continuing to show growth in leaps and bounds. I think the revenue growth will more be a derivative than something that we need to push for.
Can you shed some light on the opportunities in the smart cities sector as well that you just spoke about? And what would be the scope for work for Sterlite Tech? Would it only be the layout, or would it involve annual maintenance contracts as well?
Sure. The smart cities bid, it's a long-term evolution of the city itself. So currently the way cities are being designed is more towards the immediate needs. It's based on designs of area-based development. So essentially you design the core infrastructure, and it could be the core infrastructure. It could be water, it could be electricity, it could be gas transmission. You design the fiber layer and the sensing layer along with that. You may, and it's going to happen in phases over a period of, say, next 5 to 10 years. So for the bit of network that you design, you execute right now, the post-execution, then there is this that you spoke about, maintenance-related annuity for 5 to 7 years. And there is an additional revenue opportunity, which is towards monetizing the platform that has been created. As each city is getting created, there is a platform which is getting created on which, for example, any application provider, any startup can host its application on that city, which could be, say, for a local development. It could be somebody who's offering tuition in that area and uses that platform towards transmitting his application. So it's the annuity part will be towards maintaining that network, and it could be revenue share on any monetization that happens on the network. And that's, say, one layer of the network. As time goes on, this network layer starts getting populated. There are more applications that need to start getting designed. Say a city which has today designed for parking and lighting, tomorrow could design for traffic management, could design for different applications. Then the network needs to be augmented and upgraded. And that's an additional opportunity that comes in. Once you are inside a city, then the opportunity just keeps on growing from there in managing the core infrastructure, but in upgrading it as it goes along.
Okay. Would you be actively looking at defense contracts as well? And is the nature of a defense contract different from other private contracts in terms of money coming in from the government, the returns, etc., etc.?
This contract with defense is essentially, defense is creating a full fiber optic based network, which is pan-India in lieu of the spectrum that was vacated. So the current contract that we are doing is essentially laying the fiber optic network for defense in the state of Jammu and Kashmir. The scope is essentially you lay that network and then you maintain it for a period of 10 years. So clearly we are looking at defense as a good vertical for us because we believe as technology moves forward, the requirements for surveillance, the requirement for communication will all start becoming more and more sensing oriented, more and more data oriented, more and more intelligence oriented. And these capabilities within the company, from working across various verticals, the fiber itself is becoming a sensor. The data analytics is becoming a requirement for our telco as well as smart city offerings. And all these offerings start becoming important for us, what we start doing for any other opportunity, and defense being one of the strategic opportunities that we are looking at. definitely the focus is for us there to build alternate layers of defense, to look at alternate opportunities as defense rolls out, because communication is a strong part for defense as cybersecurity starts becoming more and more important. And we will be looking at defense as a strategic customer for us as we move forward.
Anand, afraid out of time completely. Would have loved to chat more, but thanks so much for taking the time out and joining us today and giving us your thoughts. That's Sterlite Technologies. The market is looking slightly wobbly, about 0.5% off. There is weakness in Eicher Motors in the session today. That's amongst the key losers. There's weakness in Hero MotoCorp. Seems like Bajaj Auto 2 down, so autos are probably not having the best of days. The heat map will show you there's a lot of pain within the rate sensitives individually. Infosys is the lone ranger, which is up about 1.25%, actually 1.75%. So that one is 1,003, and that is probably the only stock worth its salt which is moving up on very good volumes. Take a break on that note. In fact, wrap it up on this leg of Indian Open. Up next is the FNO show. Don't go anywhere.
Are we live?